Picture yourself standing at the edge of a digital gold rush, where the landscape shifts faster than morning fog over Silicon Valley. The crypto markets are painting a story of resilience and transformation that would make even the most seasoned Wall Street veterans take notice. Bitcoin has emerged from its recent consolidation like a phoenix rising from algorithmic ashes. Trading near $75,000, the king of cryptocurrencies is flexing institutional muscle that would have seemed impossible just a few years ago. The suits and ties have officially arrived, and they're not just window shopping anymore. Over 170 publicly traded companies now hold Bitcoin on their balance sheets, representing roughly 5% of the entire circulating supply. That's not speculation. That's strategic positioning. MicroStrategy continues to lead this corporate revolution, maintaining their position as the poster child for Bitcoin treasury adoption. Their strategy has evolved from bold experiment to proven playbook, inspiring what analysts are calling digital asset treasury companies. These firms treat crypto accumulation as core operating strategy, turning Bitcoin holdings into competitive advantage rather than mere portfolio diversification. The institutional confidence runs deeper than quarterly earnings reports. Major banks are integrating digital assets into their infrastructure, while venture capital has rebounded with renewed conviction. The market is witnessing what experts are describing as vertical integration, where crypto-native companies are using acquisitions to build comprehensive ecosystems rather than isolated products. Meanwhile, Ethereum is quietly orchestrating the most ambitious infrastructure overhaul in blockchain history. The network's 2026 roadmap reads like science fiction becoming reality. The upcoming Glamsterdam and Hegota upgrades promise to transform Ethereum from a congested highway into a 10,000 transactions per second superhighway. We're talking about throughput increases that could boost capacity from 21 to 10,000 transactions per second while reducing node storage requirements by 90%. This isn't just technical jargon. It's the foundation for DeFi's next evolutionary leap. Layer 2 solutions are already handling 92% of transaction fees and processing nearly 2 million daily transactions. The ecosystem is projected to reach $47 billion by the end of this year, with total value locked potentially surging 10 times over. Institutional-grade DeFi is no longer a contradiction in terms, it's becoming the new normal. The DeFi backbone is strengthening precisely when traditional finance needs it most. With $180 billion in tokenized real-world assets projected for 2026, Ethereum is positioning itself as the infrastructure layer for the next generation of financial services. Gas fees are expected to drop by 50%, making sophisticated financial products accessible to a broader audience. XRP has captured attention through a different lens entirely. Viral price predictions and renewed trading volume have pushed the token into trending territory, though artificial intelligence models suggest a more measured outlook. Trading near $1.84, XRP faces the familiar challenge of monthly escrow releases, adding supply pressure at sensitive moments. AI predictions point toward potential stabilization around $1.92 by month's end, representing modest upside if technical resistance can be overcome.
The broader narrative extends beyond individual tokens to systemic transformation. Corporate adoption of Bitcoin has moved from experimental to operational, with companies using digital assets for treasury operations, payments, and collateral. This institutional embrace creates a feedback loop of legitimacy that attracts more traditional players into the ecosystem. Merger and acquisition activity has reached all-time highs, with over 140 venture-backed crypto companies acquired in the past 4 quarters. This represents 59% year-over-year growth and signals market maturation rather than speculative excess. Companies are building sustainable businesses with clear product-market fit, driven by enterprise and retail demand rather than fragile speculation. The regulatory environment continues evolving in favor of institutional participation. The Genius Act and ongoing Clarity Act progress provide the framework for sustained growth, while Federal Reserve policy decisions create the macroeconomic backdrop for risk asset performance. However, this optimistic momentum comes with important caveats. Bitcoin's correlation with traditional equities during market stress reminds us that crypto remains a high beta asset sensitive to Federal Reserve actions. The recent pause in rate cuts has created risk-off conditions that affect all growth assets, including digital currencies. Volatility remains the constant companion of crypto returns. While institutional adoption provides stability, the markets can still experience dramatic swings based on regulatory announcements, macroeconomic shifts, or technical developments. Risk management isn't optional in this environment, it's essential for survival. The current market momentum feels different from previous cycles. Instead of retail-driven speculation, we're witnessing infrastructure-driven growth supported by institutional capital and regulatory clarity. This foundation suggests more sustainable price appreciation, though the timeline remains uncertain. As we navigate this evolving landscape, remember that crypto markets reward patience and punish emotion. The technology is maturing, the institutions are arriving, and the infrastructure is strengthening. But success still requires careful research, disciplined risk management, and realistic expectations about volatility. The digital gold rush continues, but now it's being led by engineers and institutions rather than prospectors and speculators. That might just make all the difference. Thanks for joining me on this crypto market journey. If this update helped clarify the current landscape, smash that like button and hit subscribe for more market insights. Follow us for daily updates as this story continues unfolding. And here's my question for you. Which cryptocurrency are you watching most closely right now? Drop your thoughts in the comments. I'd love to hear your perspective on where this market is heading next.